Welcome to Tuesdays with Trailblazers, brought to you by Global Fintech Edge, the video podcast where we bring you the latest trends and insights in finance and technology. I'm your host Siddesh, and today we have with us Ivan, CEO at Axis Finance. He runs a fintech company behind the Juzt Credit Card, which is a digital credit card built to expand access to credit and help subprime consumers move towards prime. So without further ado, let's welcome Ivan. Hey Ivan, how are you doing today?
Again, busy. Thanks for having me here. I'm very proud to be maybe my first podcast with you, but I hope it will be not the last one and to bring more insights and more content for the streaming and maybe some good ideas can pop together. Thank you for invitation.
Absolutely, Ivan. And we're quite excited to see what wonderful insights you have for us. But first thing first, Ivan, our audience would be keen to understand, your journey, your career path, the ups and downs, the challenges, everything basically.
It's a long story. It's a long story. We have started more than 10 years ago with simple idea just to make possible these credit cards in the world to be more accessible for all of the people, not for the specific segment of with the best scoring scopes, etc. And we have started this idea. Nowadays, we are present in a couple of European countries. We have operation in Mexico, we have operation in the States, and the main focus in our conversation today is the how we run the business in the States. You know, the credit card topic is really hot at the moment after the last announcement of the government in the States. And it's really something interesting how we will continue, how we do the business, how we make the things better than the others, what we expect and what we focus on.
Amazing, amazing, Ivan. Now, Ivan, I just want to understand one more thing. Like when someone clicks apply for Just Credit Card, it feels instant to the customer, right? So, but behind the scenes, a lot is happening, and all of us know that. So, what are the very first decisions being made in that moment?
It's really very complicated process. I will say it's something that we are really proud of, that we have put it all this journey as a fully digital experience. That means we focus only on the digital application, digital onboarding, digital utilization of the credit. It's something that starts very simple. I will say simple as expectation of customer perspective. The process is really customer first, fully digital, and I will say immediate. It begins with real-time fraud detection and of course the identity verification. This is very important nowadays. Basically everything after that we're starting screening sensitive data pools. It's not happened immediately, but that means a lot of controls behind the application, a lot of data pools analysis, a lot of artificial algorithms behind. This is how we do it. And on the next step is how we take the decision. In short, experience is engineered with one principle in mind. Customer first, secure, simple, and of course without any additional efforts. Let's say to happen native like somebody playing the social media or something like that.
Absolutely. Now, speed has become almost non-negotiable, right, in digital credit acquisition. So customers expect answers instantly. I mean, I'm one of them, to be honest. But why is speed so critical today, and where does moving too fast become risky?
Is maybe is very important for us. It's something that we position ourselves as a main KPI that we follow, but behind speed, it's a lot of logic. It's not happen by itself. It's a real-time risk controls. Maybe behind the speed is the first impression from customer perspective, from lender perspective, and general speaking, behind the speed is a conversion. This is a typical statement from people like us that take care of how we spend the budgets, but conversions meet speed. If we are not on the right place with the accurate speed, somebody else will take the advantage. And of course, this speed is very close combined with compliance. It's very close combined with data model, with tiny files, with commercial optimization. It's a lot of insight in the topic speech. But nowadays, you can see that most of the people, they don't expect to have their credit card after 20 days somewhere to take it, to sign it, to go back, to activate it. Everything happens in real time, approximately in between 5 and 10 minutes, depending on how fast the people are. And nowadays, especially the target that we focus to appeal to engage, they are more Gen Z people. They live in this digital ecosystem. They expect to happen immediately, everything. And the speed is really something that we put in our competitive advantage for sure.
Safe to say they expect it faster than a pizza, right? Got it. Now let's talk about outcomes, Ivan. Now, what does a real, good real-time decision look like from the customer's point of view and from the lender's side?
Say that maybe after the speech, after the all technical part and verification, we come to the really the most important topic. This is how we make decision, how we manage the risk, and how this infrastructure, this workflow affect directly the end customers. I will say behind all the data that we analyze in real time, all the scoring models, it's more than that. We tap into the different point. We have a lot of experience in Europe with open banking data. We have put it in our application and onboarding process. I will say we have been proud that we are some of the pioneers that put it in underwriting process, open banking data that helps not only us, helps the target audience to be verified appropriate, to have more chances to be approved or to have a different point of communication, especially for the target that we really focus on. I'm talking newcomers without really a lot of credit history behind that. And the next topic is we have seen on the market a lot of providers, they put cash flow underwriting services separate from the open banking. And we are really proud to use it, all of them, and something that is maybe very interesting for the audience. We have started building our own scoring model that later on will be verified by the authorities. I will say scoring data is not enough to make the next step for identifying the best customers. We need more additional signals in order to give better access to all of the people that want to have additional, let's say, or new access to financial services, especially for credit cards.
Makes total sense. Now that leads to an important distinction of, let's say, not approving more customers, but approving the right ones, right? So how do these data sources help make that difference?
Nowadays, everyone is focused on, let's say, on market growth or a lot of ton of customers, but we are focused on the right ones. That means it's not necessary to have millions at the moment. We need to have the right ones that we can continue to develop from stage A to stage Z. That means we want to have more discussion with the customers depending on the real-time data. All this cash flow data, all additional sources of data give the both sides more opportunities to make the next step, to be more transparent, first of all, to have more clarity, to have more speed, and let's say to have more chances to be really part of the financial inclusion.
Got it. And there's still hesitation around, thin file or first time borrowers. So in your experience, what's the biggest misconception about lending to these kind of customers?
See, nowadays, I can speak from real experience that we have at the moment. We have started with the standard credit scoring models with the credit bureaus, with alternative credit bureaus data. We have seen that this data is not exactly the data that help us to have responsible customers. That means in the future to have the responsible lenders and all the necessary data nowadays. I said additional cash flow data, additional attribution models by transactional data. All these points will help to qualify the potential customer different. Tiny doesn't mean untrustworthy or risky. It doesn't mean that. With the right data, you can clearly spot responsible behavior. That means to give the chance these customers to grow with you, to have the financial real inclusion, to build the behavior over the history. This is something that I see is it will be really hype on the market. A lot of financial institutions, they put it in their underwriting process, and all that helps a lot of additional customer to have chance to go ahead, not to stop by the traditional credit bureau data. And from the other perspectives, we have really deep discussion with our partners. We see that they do everything possible to give additional models to lenders, like additional cash flow data from different sources that will help to improve the scoring models. This is something really important. And back to your question, it doesn't mean risky. It is how you manage the data, how you source the data, how you analyze the data, and how you take the decision after that.
Got it. Now, why does approving the right customer quickly matter so much when it comes to, let's say, building sustainable, lower risk credit products?
I will say we have started with the clear idea everyone need to have the chance to be part of the financial inclusion. And step by step, we have seen this dialogue between us as a lender and the customers, and we can start making good conversation in between in order to have a better experience. I mean, if the first credit experience shape future behavior, if we start with limits, we're starting to educate the customer, we guide them step by step, and we expect to have loyalty behind. That means we focus on the lifetime value from the customer with the right customers. And of course, the first user experience is very important. This early engagement, onboarding education, it's something that bring on the final stage positive repayment habits.
Got it. Now let's close with the bigger picture, right? So at the end of the day, what does responsible growth in credit really mean to you?
So again, I observed the both sides. It's about inclusion without breaking the standards. That means the same level of communication, the same level of responsibility. On the final stage, we can put additional smart data in order to build long-term customer value, and of course to help such kind of customers really to be financially independent. This is something very important for our efforts that we bring on the market.
So one thing I want to understand is, with the advent of AI, artificial intelligence into every space right now, obviously going into fintech as well. Which side of AI are you on? Are you on the side of that AI is going to be the next, the future within the fintech market as well, or are you saying that it's kind of a, it's not going to be there for a long time, basically?
Sid, we have started using AI and machine learning models maybe 5 years ago before became a really hype on the market. And we have, let's say, separate pilot projects that we use it. We have started to use it in the customer service, generally speaking, in the conversation. But the most important part that we really focus on is in the credit risk management. We built really machine learning models, automated decision engines that help us in real time to have the possibility to make risk, let's say, risk management in the different segmentation in real time. That means to have the opportunity in real time to analyze the customer, to make some prediction. And we invest a lot of that, not only in the data science teams. We built a lot of infrastructure, a lot of models, and something very interesting. We have seen that the standard scoring doesn't work this way. That is the reason to make additional models with additional data in order to build our own models. And everything what we do with AI and machine learning. Everything. On the second topic that we use it is with the collection. We use a lot of partners in that area. Collection, that means automated communication depending on the availability, depending on the response, on the channel. Everything is machine and AI built. In finance, not everything can be put in the agent, or
True.
not everything can be built with machine learning and of course with AI, but we use a lot for the productivity and for conversions. And we continue to do it. We have built a lot of models in the different countries, depending on the localization, and we have seen is acceptable, especially for the area of the operation, back office, customer service, every single area that we can improve it and make, of course, more dedicated. But it's a hard work. It's not happen just put it the AI and you're happy. It real training. It needs a lot of data sources in order to start training the tools, the models appropriate. This is very important. It not happen that everyone is looking on the papers and they take the decision, oh, it's so easy, we'll put it. In the financial sector is not easy. But I see that a lot of competition, a lot of the, let's say, from the domain, they use it the similar way, but we are really proud because it's part of our success, especially by managing the risk and decision making. This is something that really are proud, something that can be measurable, especially after we put it in the models. We continue to improve our performance for a couple of months, more than 50%, especially for the analyzing the beta customers. And after that, the scoring models help us to put this in the performance marketing. Can you imagine that? This is a real time. The best customers that we utilize and the prediction how they will behave later on is put in the performance marketing in target audience, and that help us to focus on the right customer at the right moment. This is something that we are really happy with, and we continue to invest, and this is behind the scene. All the tools are machine learning, large machine learning models, and AI tools.
Makes sense. And let's bring the crystal ball out, Cheryl. If Ivan were to make predictions, let's say 10 years down the line in terms of the fintech landscape or credit risk and stuff like that, what would your predictions look like?
Especially for risk models, I will say step by step. We have started a project, especially in the States and the Mexico, compared to the European operation. We have a lot of people. We are part from a holding group that are more than 10,000 people inside. But we have started building companies with a couple of people and only focus on the process design, workflow models, and automation. That means in the future, maybe a lot of back office activity, everything will disappear by really fluent, smart processes. And something that we expect to have it, we expect to miss the plastic in the credit card industry. We have started our project in the state with the idea not to have a plastic alternative, but the law and compliance said you need to have if somebody want to have. And we really focus on the digital experience. That means we don't need to have a plastic in order to make a payment or to have a payment tool. And the next step, it will be again fast speed, security, and of course transparency. This is something that will continue to develop, and our expectation is that credit will not disappear in the different forms, and something in terms of regulation will be able, or let's say this limitation somehow will help a lot of fintechs to have the innovation in order to have a different data sources to analyze the potential. And this is something that a lot of smart people thinking how to overcome the limitation of the next. And from my perspective, it is a lot of AI, it is a lot of smart decision, simple decision. It not need to be so complicated, but will resolve the same issue. Credit remain the same regulation all over the globe.
That makes perfect sense, and I mean, really appreciate you sharing all those wonderful insights, Ivan. Really enjoyed hosting you on our podcast Tuesdays with Trailblazers, and thank you all for joining us today. If you enjoyed this episode, please subscribe and leave us a review. Until next time, stay tuned with Global Fintech Edge for more insights. Till we meet again, signing off, your host Siddesh.